going on, guys? Just throwing together a quick update video. Everything looks very good. SPY finally got the pullback I was looking for, and AMC actually is a little bit ahead of schedule, a little bit further along through the channel, the ascending channel, than I previously thought. So looks very good, and there's multiple things supporting that, and I'll just jump into it. So we'll start with SPY, the macro on SPY. Same shit, different day. So descending broadening wedge for a year, breakout, retest, reclaim the ascending triangle. The descending broadening wedge transitioned into an ascending triangle here. So reclaim the triangle, very flat towards the end here before you break out. You gap up from the breakout. We got upside to 444 and then pulled back, found a bounce off the 20, double top 444, and now today gap down and finally got the pullback that I was looking for, back down to that 437 to 438 range. So this looks very good. I'm going to get into the symmetry and all that, but 68 days in a row closing over the 200 EMA. So SPY has not seen the 200 in over 2 months now. Golden cross on the daily, very, very bullish here. SPY will be going to all-time highs in the relatively near future. So very bullish on SPY. Again, touching on SPY on a daily basis because both times AMC squeezed, January and June, SPY was rallying to the upside in a very similar fashion to what we're seeing now. And as I previously stated, from October 2022 until now, SPY has done nothing but form higher highs and higher lows to the upside and break both macro patterns, the descending broadening wedge and the ascending triangle to the upside. And this range that SPY is trading at right now, we have not seen since April 2022, so over a year ago, all the way back here. So it's that. Now jumping into the symmetry on SPY, I've touched on this numerous times. I'm just going to continue to do so until the symmetry is broken. So far it's playing out perfectly symmetrically, so I'm going to continue to touch on this. So starting with the blue box here would be your middle, where you have your lowest low. You have one break above the ascending triangle right here to retest the macro of the wedge, and then coming into the red, you break below this horizontal line at 380 on both sides. The one on the left came slightly lower again to retest the wedge, and then from there you find a bounce to 418 on the dot where you reject, and same over here, 418 on the dot where you reject. Then you come down into the green to 380 on the dot where you find a bounce, same on this side as well. And then from there you bounce all the way up to 430, 3 touches on it, same exact thing over here, all the way to 430, 3 touches on it, break through that, come up to 438, reject and break through, come up to 438, reject and break through, and then we were looking for 450 as far as the symmetry went. We ended up getting rejected at 444. I mentioned because we were looking for the move to 450 and then a pullback, a retracement to 438 to establish support here before moving higher. We didn't come all the way up to 450. We came up to 444. So I said you could expect to pull back a little bit further than 438, roughly to this horizontal line at 429, 430. And that's pretty much what happened. We pulled back to 431, found a bounce there, and then we got the double top. So now we're looking at these green circles now. As far as the symmetry goes, we got a double top slightly higher on the right side. So we came up to 444. We came down, found support, and then we double topped slightly higher, and that's exactly what happened over here as well. You came up to 450, you come down, find support, and then you double top slightly higher than the previous high that you see here, and then you pull back to the middle of the range before moving higher. So if you remember me saying in my last video, I'm going to be looking for a pullback now on SPY to the middle of this range here, which would be roughly 436 to 438, and today we pulled back to 437, found a bounce, and found upside from there. So this looks very good. Still, the symmetry is on track. I'm going to continue to touch on the symmetry until it is broken. So far, it's playing out perfectly symmetrically. Touch points and all, perfectly symmetrically. Got the pullback I was looking for. Now, it is possible from this pullback that we see here, and this is what happened back here. I'm not saying it has to be the same exact way, but it's going to look similar. So when you pulled back to the middle of the range here, you form a W before you move higher. I'm not saying we have to. I am just pointing that out, though, that from the first bounce here off the middle of the range, strictly based off what happened previously, what should happen here is we bounce up and then come back down, double bottom, 437, 438 range before moving higher. Doesn't have to. We could just break to the upside here, but I'm leaning more towards we're going to get that pullback. And what that would look like, and again, this is the uptrend from the breakout of the ascending triangle here, where you fake out, come down to support here, you break out, you retest, and then you claim this bull trend, and you ride this bull trend acting as support all the way up to the highs of 444. break below the bull trend, you actually gap below it, and we trade in this descending channel here for about a week before breaking that to the upside, and then we got the double top slightly higher than we were looking for. Now, from that double top, I said you can expect a pullback now, roughly to the 438 range, which is what we got today. Pull back to 437 and found a nice bounce, touched 440 again, and closed the day somewhere around 440. I don't remember the exact number. It doesn't really matter. But so if we did get the W move here, which I'm leaning more towards we're going to, you would probably see some more upside tomorrow, maybe to like the 442 range, the bottom of this range here. Reject that, come down, double bottom, and then move higher. It is also possible that we just straight line from here, but I'm really leaning more towards we're going to get the W move. So coming back up to this 442 range, or, you know, who knows, maybe we just reject right here, double bottom. Not financial advice, but the next, if we do come back down to 436, 437, I'm going to be loading calls on SPY pretty heavy. You know, I'll give myself like a week or two and pretty much at the money, just guaranteeing profit here. But if we do come back down and double bottom, that's the plan for me. And, you know, from that double bottom that we get, just going back to the symmetry here, once we get that double bottom here, you know, establishing support on the middle of the range, as we previously saw here, which is where we are now. From there, we should break higher, and that would pretty much take us to 460, 465 range. I have to see how this plays out once we break out of this. Once we break the 444 highs, this could break the symmetry and play out differently, but, you know, just as far as it's gone so far, this move is perfectly symmetrical. So that's pretty much it for SPY. Once again, SPY rounding to the upside in a very similar fashion to what we saw in January and June 2021, while AMC and the rest of the meme basket was squeezing. So this is exactly what we want to see on SPY. Now, jumping into AMC, and this would be the macro perspective. You have this descending trend line from 2017 and all the way down until you find your squeeze in January 2021, which would be comparable to this descending trend line that we have here from the breakdown in the flag in November from the June highs. So you have this descending trend line here. You have a gap down here. This is a fractal break right here. Right here, fractal break, and then you get into the downtrend, and this is a macro macro fractal here that plays out all the way until the end, where you get another macro fractal break right here, this gap that takes you to the squeeze, starts a whole new fractal. So that's one fractal here from this fractal break, and over here we have the same exact thing, you know, where this trend line starts, there would be your fractal break, you play out this pattern here, same as what you saw here, and then you get down into the green, which is more or less a W, same on both sides, the red being more or less a cup, same on both sides, and the blue, you come down, bounce up, come down, bounce up, come all the way down and curl up towards the end on both sides before breaking down to this flat portion here. And I mentioned multiple times, you have three bottoms here, 1, 2, and 3, and from that third bottom, you form an uptrend, which breaks you out of the triangle and takes you to your squeeze. So that's what we're going to be looking for now. We already got our third bottom, so here would have been the first, the second, and the third bottom here. Again, previously mentioned, I was looking for a lower low here, slightly lower than what we saw in April, the April after hours knife. We didn't end up getting that. We bottomed at 401. I mentioned that we didn't have to have a lower low, and we didn't get one. So, you know, it looks very good, and now we're in the uptrend, and let's just move on from that. Again, this is the exact same thing that I just showed you, same exact chart. I just removed the colored squares off the flat portion to make it look a little bit more visible and threw some lines on. So from the start of the downtrend, 1, 2, 3, 4, 5, 6 takes you to the end of the blue. 1, 2, 3, 4, 5, 6 takes you to the end of the blue. And then you break down to the flat portion where you have 1, 2, 3 bottoms before you find an uptrend and break the triangle and squeeze. So over here, same thing. You break down from the 6 point. 1, 2, 3 bottoms, and now the uptrend that will be breaking us out of the triangle here and taking us to our squeeze. Once again, price targets $140 based off macro Fibonacci extensions, and that is my conservative low ball target. I'm leaning more towards this squeeze will be the MOAS. And again, 140 price target is not accounting for the reverse split. That's if we squeeze right this second, no reverse split. Price target from where we're trading at right now, if we squeeze, would be $140. With the reverse split in effect, it would be $1,400. So that's that. Now, jumping into the micro, once again, so what we're doing with the micro is we're zooming in on the flat portion here. This orange, purple, and blue box, the flat portion here that took you to the squeeze, where you break the triangle and you squeeze. So that's what we're going to be zooming in now, the orange, purple, and blue. We're comparing both flat portions here. That's what we're looking at in the micro. So getting into that now, the orange box here is more or less a W. You have chop at the bottom of the range, which takes you back to the top. Same over here, it's more or less a W. You have chop at the bottom of the range, which takes you back to the top. Again, the chop here is a lot tighter. The support resistance of the current cycle is a lot tighter than what we saw previously in the 2021 cycle. Coming into the purple box now, it's more or less a cup with a higher high on the right. Same over here, a cup with a higher high on the right. And then the blue is more or less a W, and you have a tri-peak in the middle, and it's a very symmetrical move. It breaks you out of the triangle and takes you to your squeeze. So that's what we're looking for now. We have the same thing over here, the first bottom here, the tri-peak, and then the second bottom. And now we should be forming an uptrend here that breaks us out of the triangle and takes us to our squeeze. Again, I have a horizontal line drawn across in white on both sides from the second peak of the tri-peak when you come down and bounce to the third. So same over here, second peak, come down, bounce to the third peak, horizontal line drawn across in the blue. So when you're coming down at the beginning of the blue box here, you break below it, you come above it, and that takes you to your second bottom. Same exact thing over here, you break below it, you come above it, takes you down to your second bottom, runs right under the purple on both sides, and then right across the chop at the bottom of the W in the orange, and right above this gap here on both sides. So looks very, very good. Again, as far as the date range goes, we are tracking this macro faster. From the start of the orange here, the flat portion in the 2021 cycle, from the start of it until squeeze day, January 27th, 2021, 342 days. And again, from the start of this until your third bottom was 320 days roughly. So from the third bottom in the 2021 cycle, from the third bottom until your peak was roughly 22 days. We already got the third bottom here, and I believe we're on day 7. We're tracking this faster. From the start of it until your third bottom, 204 days versus 318. We're tracking the cycle roughly 3.5 months faster. And again, from the third bottom until your peak, 22 days. And we are about 6 or 7 days in, I believe, from the third bottom here. So again, things could get parabolic very fast here. And actually, where I believe we are in the tracking, while I'm here, I could just show you, is when you find that third bottom, you pop up here, and then you actually have one pullback here before you get this move here, which breaks you out of the triangle. And this is where we would be. This pullback here and this chop here, that's where we would be on the tracking right now, in my opinion, having pulled back here. And there's multiple things supporting this. I'm going to get into that now. So that's that. And now this is the exact same thing I just showed you. Same exact thing I just showed you, except it's not candles. Now it's an area chart. We're again looking at the flat portions of both sides. I like the way this looks a lot better. It's more clear. It makes the picture a lot more clear, more visible. So in the orange, again, you have this chop. You come down to the bottom here. It's a W. You find your first bottom here. Same thing on this side. W, get the chop at the bottom. That's your first bottom there. And then it brings you back to the top. You have 3 peaks in, and they're higher peaks every time, increasing height on each peak, which takes you to the end of the purple. So same thing here, 1, 2, and 3, increasing height on each peak on both sides. Again, the purple is more or less a cup, same on both sides. And then the blue, you come down, break below that horizontal line, bounce above it, and then come down to your second bottom. And then the exact same thing over here, breaking below that horizontal line, bouncing above it, coming down to your second bottom. From the second bottom, you get into the tri-peak. 3 peaks there, 1, 2, 3 over here, and then from the third peak you come down, find your third bottom, and then you form the uptrend that breaks you out of the triangle, and then you get a straight line into your squeeze. So that's what we're going to be looking for now. Again, touching on this, I was looking for a lower low than what we saw here in April, the April after hours knife. I was looking for a lower low. I mentioned we did not have to have a lower low, and we didn't get one. We had 7 wicks on the 1 hour chart. The 401 absolutely could not break sub $4 here. And then we found this uptrend now, and where we would be approximately, and it's marked by the flag right here, is in this pop here, and then you get this pullback, and this would be that chop where you break below the ascending channel. That's where we would be right now. So you get this pop, and then you get the pullback, and it's chop here before you move higher. So that next move higher that we see, the next volatile move to the upside, and I say volatile like relatively to what we're seeing right now, the next volatile move to the upside that we get should be the breakout move of the triangle. So this looks very, very good. Now, getting into the micro on a smaller time frame, the tracking, again, I showed this in, I think, all of my last videos that I've done, where this would have been the third bottom that we were looking for. You have this pattern that plays out that takes you to the third bottom. This would have been the lower low, the third bottom in the 2021 cycle. in the third bottom in our current cycle. Could not break 401. Perfect wicks here down at 401. Absolutely could not break that. And then found a very nice bounce off on volume. And I mentioned we're going to be tracking this channel now, the uptrend in this channel. We're going to be tracking this and, you know, getting into it now. And before I do this, again, I just want to make this very clear to everyone. Tracking on the micro is insanely hard to do. It's very easy to get lost. Things are going to look very similar all the way through because this is just a repeating pattern over and over and over again. It's a repeating pattern. That's what it is. Fractals repeat. It's very easy to get you know, lost in the micro trying to track this on a small time frame, like a 15-minute time frame. So again, take the micro tracking with a grain of salt. The thing that matters, and I've mentioned this multiple times, the thing that truly matters is the macro perspective. And as far as the macro goes, we're just looking at landmarks, you know, and very clearly we're in the flat portion. Undoubtedly, undeniably, we are about to squeeze. As far as the macro landmarks go, we already got our third bottom, and now we should be in the uptrend. So tracking this on the micro, never going to be perfect. I'm just trying to give a roundabout area of where we are in the uptrend. Now, this uptrend should be breaking us out of the triangle, and we should be squeezing from here. And again, I'm leaning more MOAS than anything. So, you know, getting into the tracking now on the micro. And this would have been the breakdown here where you find your bottom, and the same here where you find your bottom here, and you get a reaction off. This is a little bit different now, and it's still valid. So you get the reaction off, which would have been the equivalent to this pop here. You come back to support on both sides. You come back to support, and then you get another pop, not as high, pretty much to the middle of the range, and you get the same thing here. Off of support, you bounce to the middle of the range, and then you come down to support again. And we did here, and then you have a very slight uptrend here on both sides. Then you get another pop, a pop higher on both sides, and then you come back down to support again on both sides. Then you get another pop higher, and we did here. And then you come down and you form a double bottom, and then you find another bounce to the middle of the range and find another double bottom marked by the white. So same thing here. First bottom there, the bounce to the middle of the range, and then the second bottom there, a higher low on both sides. From there, you move even higher. And this would have been where we are now, the breakdown from these highs here, pretty much rejecting off the top of the channel on both sides here, breaking down from this below the channel, and then we get into this chop here. This is where I have us right now as far as the tracking on the micro goes, and there's more than just this to support that. So I'm going to get into that. So you find your first bottom, you bounce up. You find your first bottom, you bounce up, pretty much to the bottom of the red box here on both sides. From there, you come down, form a higher low. Same on both sides, and then you double top, same on both sides, and then you double bottom, same on both sides. From that double bottom, you find an uptrend, and that's approximately where I have us right now, where we'd be looking for this next pop here, which, I mean, theoretically, it doesn't have to, but theoretically would take us back to the middle of this range in the red, assuming, you know, 445 to 450-ish, somewhere in that range. That's what we're going to be looking for next. Doesn't have to happen. It doesn't have to be perfect. The wicks are never going to be perfect with this, but, you know, just to put it simply, we're going to be chopping in this range now, in my opinion, before we get the move higher here that we're looking for. You get these boom candles here, and you move up to the next range, and that's what we're going to be looking for next. But as of right now, I still think we have some time here, chopping around, you know, in this range. So this is what we're going to look for now. Just chop, just sideways, you know, forming some higher highs and higher lows. That's what we want now. So looks very good. Supporting where I would have us in the micro. So in the micro, I would have us in this chop range right here, which would be where we are now, where you break below the channel on both sides. So we're in that chop range. Now, I've touched on this multiple times as well. The daily gaps. This was a daily chart of the 2021 cycle on the left and a daily chart of the current cycle on the right. The gap movements, I'm not going to go over them in this video, but they are identical, marked by the flags here. I probably should have changed this color yellow because I have a yellow background on it, but they're there. Same gaps on both sides, the green there, and then the red here. You have the tri-peak, you have the tri-peak here. All the gaps are the same. Now, the EMAs, and this is important. This is pretty crazy. You know, I mean, we're tracking perfectly, so it does make sense that the EMAs would look exactly the same, but the EMAs legitimately look exactly the same. And just for now, I'm just going to cover the 20. So the 20 EMA, in the orange box here, you're below the 50 pretty much the whole time, and then you break above it, you come back underneath, and then you come a little bit higher. You have this wave type move here with a higher peak on the right with the 20. And then over here, same thing, the 20 is under the 50. And then you get this wave type move with a higher high on the right, which takes you into the blue box, the beginning of it. And actually right where you find that gap, it's right above that. So same on both sides. And then you break below the 50 again. Same on both sides in the blue. You break below it, which takes you to your second bottom, and then into the tri-peak, you break above it on both sides, same thing. And then from the tri-peak, you get your third bottom, which breaks the 20 below the 50 again. So it breaks the 20 below the 50 again here. And then the next time that you see the 20 EMA, as far as on the daily, is in that iteration from the third bottom where you bounce off of the third bottom and you reject the 20 EMA here. And this rejection off the 20 EMA is actually the break below the channel. These candles here is the break below the channel, and that is where we are, having rejected the 20 EMA here. This rejection here, this is where we are on the tracking. So this also supporting the fact that with the tracking I'm showing you here, where we would have broke down from the top of the channel and broke below it. So this is where we would be as far as the tracking goes. And looking at the daily chart, it's with the EMAs, they're exactly the same. The gaps are the same. And the movement here, the rejection off the 20, this is where we would be. And that's exactly what I just showed you on the 15-minute. This is the daily. So this looks very, very good. I mentioned in my last video, the next time the 20 EMA crosses the 50 EMA to the upside, we should be squeezing or about to squeeze. So that's what we're going to be looking for. This uptrend is going to take a little bit of time, but we are tracking this faster. So I mentioned like things can get parabolic very quickly here. And once again, this move in the blue, the W with the tri-peak, is a very symmetrical move on both sides. It's a very symmetrical move. And over here, it looks like we're getting a very symmetrical move playing out now, where we would have just came down to the bottom equivalent to this. You know, not accounting for the knife that we got after hours here, but this bottom pretty much lines up perfectly with this and curling up to the upside. Now a straight line would be the symmetrical equivalent of this move. So that's what we're going to be looking for now. With this, along with the tracking, so along with the macro, along with looking at the micro and the area and the zooming into the 15-minute tracking, along with that, along with the gaps on the daily, along with the daily EMAs, along with that, there's something else that I actually found the other day, and it's now we're going to be looking at the same exact thing. Again, we're looking at the micro, the flat portion on both sides here, but these are not regular candles now. They're Heikin-Ashi candles measuring momentum. So you can't really tell with this. You have to take my word for this, or you could check yourself, but pretty much the same thing on both sides, where you have red down, green up, red down, green up, red down, green up. So same thing on both sides. I'm not going to bother going through this whole entire thing, but what I will do is zoom in on the blue box here. So 2021 cycle on the left, current cycle on the right. Heikin-Ashi now looking at the momentum here. So coming down at the start of the blue box, it's pretty much red all the way down. You have a few spurts of green here. It's a reiterating bear flag. So you have a little bit of green here all the way down. Same over here. You have a little bit of green there, a little bit of green there, until you break below the horizontal line on both sides. And then you get green candles up, and then red candles down to your second bottom on both sides. Same exact thing. From the second bottom, you have green candles up to your first peak, green candles up to your first peak, red candles down, green candles up to the second peak, green candles up to the second peak, red candles down, and then green candles up to the third peak, green candles up to the third peak. From the third peak, you just get straight red all the way down to the bottom, your third bottom here, and we have the exact same thing here. And the next time from that bottom you start seeing significant green candles is when you're in the uptrend that takes you to your squeeze. This uptrend that breaks you out of the triangle here and takes you to your squeeze. From this third bottom, it's all red straight down. We have the exact same thing here. So I'm extremely inclined to say the bottom is in here. And then again, the red flag would be just showing you where we are in the tracking, where this would have been the third bottom. The equivalent would be right here. And then you get into the uptrend. You get this pop here in green. You get this pop here in green. And then you get this pullback in red on both sides. It looks perfect. So, again, I still think we have some more time here, maybe another day. Maybe on Monday we get the next move to the upside. I could see tomorrow being relatively sideways. I would love to see a pump tomorrow, but I wouldn't expect one. I would expect tomorrow to be another chop day, relatively flat. As far as everything goes, again, just recapping everything. SPY has broken both of its macro patterns to the upside. The descending Broadening wedge and the ascending triangle broke both of them to the upside from October 2022 until today, forming higher highs and higher lows to the upside. Exactly what we want to see. Both times AMC squeezed, January and June, SPY was rounding to the upside in a very similar fashion to what we're seeing now. So SPY looks great. SPY's perfect. That's exactly what we want to see. As far as the macro goes, the macro looks perfect. The touch points, the landmarks, the gap down here at the beginning of the trend on both sides, 1, 2, 3, 4, 5, 6 on both sides. You break down to the flat portion, 3 bottoms here, 3 bottoms here. You have the tri-peak in between the second and third. Same here. That looks perfect. So that would be the macro. And now, getting into the micro is perfect. As far as landmarks go, we got our third bottom and we're now in this uptrend here. And this pullback here is where we would be. Again, we're tracking this faster than the 2021 cycle. The area chart looks insanely good, looks perfect. The tracking on the channel here, the ascending channel on the 15-minute, zooming in all the way to the 15-minute, looks very good, looks very solid. The daily gaps, so the gaps on the daily are the exact same exact spots on both sides. The daily EMAs are the exact same on both sides. And again, we would be in this pullback here from this pop and you reject the 20. That's where we would be. Same right here. So that's, I don't know why it does that. So that looks good. And then the Heikinashi, the momentum, looking at the momentum of this move is perfect as well. So everything is pointing towards us being in this pullback here. This is roughly January 13th or January 14th, 2021. This pullback here before you get the next move up, which breaks you out of the triangle, and then from there it's a straight line to your squeeze. Holy shit, almost a half hour in. Let me not drag this out any more than it has to be. Everything looks good. So that's pretty much it. I'll do another update video tomorrow. I might touch on a few more things, touching on the price targets again, showing the fibs, and I want to talk about the reverse split again because some people, you just need to tell them a million times, and that's pretty much it. So I hope everyone enjoys the rest of their day today, and I will catch you guys in the next one.